Hello and welcome to today's presentation. We're going to be talking about ways you can navigate the mortgage process. This is going to be specifically driven and focused in on home buyers as well as investors. If you are new here, I want to first of all welcome you to the first Home Pathways property series. This is a series that I have actually been providing behind the scenes to the Golden Key organization, but I wanted to bring this to the forefront as I believe this comprehensive guide can help more people navigate the mortgage process and again understand some key tips and insights which are going to be crucial for you having a smooth and successful real estate transaction. Who am I? I'm a wife. I'm a mom. I'm actually a mom of 4 boys. You don't see the fourth there. We got to get some updated pictures, but I am a boy mama. I'm a realtor, licensed life insurance agent, entrepreneur, philanthropist. You see there a picture from 2018. This is a picture of young men and young women who were able or was afforded the opportunity to provide scholarship money to pursue higher education. There's an organization by the name of the Boys and Girls Club who was so pivotal in my journey as a youth. They poured so much into me, and I credit a lot of where I am today because of that organization. And I always said if I ever made it in life, they would be the first person or organization that would benefit from me making it, right? Because I know that was only a small step in my journey. It's so much more for me to do, but I wanted to make sure that I fulfilled that, and I absolutely did. And I always talk about it because it really warmed my heart. But enough about that. Let's hop into the steps of you being able to navigate the mortgage process. And that first step is knowing your budget. Before you can even start the mortgage process, we will have to assess your financial situation. And by we, I mean the lender. We can't look at your family or your friends or a stranger situation, right? I heard they were able to buy at this dollar amount. It doesn't matter their situation because your situation could be completely different. We want to look at your situation to determine how much you can comfortably afford and consider all factors like down payments, monthly payments, and even closing costs. Let me also give this small tip of or recommendation if you're in a two-person household. I know a lot of times we are inclined to say, hey, let's both put our names on the mortgage application. They're going to combine our income, and that's going to increase our budget or the amount that we would be able to qualify for. I love it, right? But I always recommend for buyers, if you can, to get approved off of one of the individual's income. Because should life happen, and we know that life be lifing sometimes, and life can happen. Something happens to your spouse, they lose their job, they get injured, they get sick, they're no longer able to work. You don't want their income now to impact your ability to be able to pay your mortgage because we all have to have a roof over our head. So if you're able to qualify with one income, please do so. Understand your first home does not have to be your forever home. Stay there a few years, pay that mortgage down a little bit, then move on to your next home and possibly have your first one as a rental home. And now you can use that rental income to now increase your budget and your affordability. We want to also take a few moments to talk about credit because credit absolutely matters when you're talking about getting qualified for a mortgage. And I know some people will say, well, I'm going to go and buy my home cash. While that could be your situation, the reality is most people's situations aren't that. Most people can't go and drop 250, 300 plus $1,000 cash on a new home. So you want to make sure that you're maintaining a healthy credit score if you're in need of leveraging it to get qualified to secure a mortgage. And when I talk with my clients, my goal is not for you just to barely get qualified. You meet the minimum terms to get qualified. I want you to qualify, but qualify with the best mortgage terms because there is a high chance and a possibility, and it's a reality that you could purchase in a neighborhood, have a neighbor with the same exact floor plan, exact features, but you could possibly be paying more for your home than your neighbor because your credit is not strong. And so you want to make sure that you're monitoring your credit, you're addressing any discrepancies and strive to improve your score so that you qualify for the better interest rates. And part of that is understanding how your credit score is calculated. Most people don't realize that there are 5 different factors that make up your credit score. The first being your payment history. It absolutely matters that you pay your bills on time. Late payments will plummet your score as it is the biggest chunk of your credit. Another 30% is the amount that you owe. You should not be maxing out your credit cards or carrying a ton of debt. Lenders evaluate something called the DTI, debt to income ratio. If your debt does not match your income, it could lower your budget or even take you out of the ability to even qualify. Oftentimes, I have ran across clients who get qualified, they want a larger budget, but there's no space to have a larger budget because they're carrying a ton of debt. Another 15% of your credit is length of credit history. Lenders and creditors want to know that you know how to maintain credit and you have been doing so for a specific time frame. Do not be discouraged if you don't have credit or a long line of history of credit. There are options still available to you, but we want to make sure that we address that and you start taking some steps and action towards establishing that credit history. Another 10% is new credit. Do not go applying for all the credit cards or cars or anything under the sun. New credit accounts for 10%. If you have a ton of inquiries on your credit profile, that will lower your score. Each inquiry could cost you 3 to 7 points. So imagine if you have 10 inquiries, that's 30 to 70 points that could be held against you because you keep applying for credit. And the last 10% is types of credit. You got to have a good credit mix. Lenders want to know that you know how to handle multiple types of credit, revolving and installment credit. Sometimes I find individuals that have one and not the other. And sometimes I find individuals that have no credit because they're paying for everything in cash. And you want to know if you are that cash person, you are hindering your score by 10%. Now, if you have discrepancies or negative, erroneous, obsolete items on your credit profile, I want you to be empowered and know that you can address those items. If you need professional help, there is nothing wrong with paying professionals to assist you in this area, especially if it's not your expertise. I do provide free credit audits if you want to sit down one on one and look to see what's going on with your credit. Or should you need professional services, I also provide credit restoration services. Once we get your credit where it needs to be, now it's time to explore loan options. I call this window shopping, right? Just how we would go to the mall and we may go window shopping, compare pricing, and see what's the best item or what we would want to purchase that specific day. The same applies when it comes to home loan shopping. There are so many different loan types. They have fixed rates, adjustable rates, FHA, VA, USDA, and so many more. There are even loans specific to states and cities. So you want to understand the differences and the benefits of each. This will help you to choose the most suitable option for your needs. As a professional realtor, I provide my clients with 3 different options and I advise them, hey, shop around. See which lender is going to provide you with the best product that fits your needs. You want to do that within a 30-day time frame to only account for one inquiry. You don't want to start with one lender and then decide months down the line, okay, I want to work with someone else. Now you're going to run the risk of multiple credit pools. So I advise clients in the beginning to shop around. I also give the disclaimer, not all lenders are created equal and not all realtors are created equal. So make sure you do your homework and you shop around and you work with the best fit for your situation. Once we identify the best loan option for you, now it's time for you to get pre-approved. No realtor, well, let me say no professional, seasoned realtor is going to go show you a home without a pre-approval. The pre-approval is provided to the realtor from the lender, and it also demonstrates your serious intent to purchase. There is no way as a realtor I'm going to take you out looking for homes that could possibly be outside of your budget, right? Let's say we go look at a home that's $500,000, only to find out later you're only qualified for 250,000. Now we have wasted time and gas, which we know is not cheap, looking at homes that are not even in your price range. So it's so very imperative that we get the pre-approval, and this will also help to give you a competitive edge in the market and streamline the mortgage application process once we find your dream property. Once we submit your offer, the listing agent is going to ask with the offer to purchase for the pre-approval. This lets them know that this is a serious buyer. They have the funds to purchase. They've already been pre-approved, and now they can present it to the seller. So it's absolutely imperative. We also have to factor in any additional costs. Oftentimes I run across buyers who want the down payment programs, the zero downs, the no money. And I am an advocate, right? If you can go get a house and not put anything down, let's go for it. But we still must factor in additional costs. Lenders want to see that you have a little bit of money in the bank, right? To take care of these costs. Because beyond getting approved and purchasing the home, there are some other expenses when it comes to purchasing the home. It may be property taxes that are typically prorated, homeowners insurance, HOA fees, maintenance costs, most importantly, inspection costs, appraisals costs. Those things have to be included in your budget to avoid any financial surprises down the road. Let me also tell you that an inspection is optional. Although I tell my buyers that I work with, it is not optional. You must get an inspection. You want to know what you're buying. The last thing you want to do is buy this beautiful home that looks so amazing from the outside, only to close and get in the inside and find out that there are so many issues. There was a hole in a pipe under the ground that you weren't aware of because you didn't get an inspection done, that there's a leaky faucet or there's a gas leak. There could be a number of things that is wrong with the home that the physical eye cannot see. So I absolutely highly stress to my clients, we have to get an inspection, and that does cost money. Okay, gotta stress that. You want to make sure that you're working with a reputable lender, and I'll say also a reputable realtor. I cannot stress enough that lenders and realtors are not all created the same. And while I would love to say that everyone operates ethically and morally, the reality is that's not true. And so you want to make sure that you're working with a reputable lender, and this is where you want to make sure you're shopping around to make sure you're getting offered competitive rates and exceptional customer service. Customer service is so key. I even ask my buyers, for the lenders that I send them with and I partner with, I ask them how was their experience. Because if my buyers tell me their experience wasn't good with the lender that I'm working with, then I need to address that and have a conversation and possibly end that relationship, because customer service is top tier priority for me. A trusted lender will be able to guide you through the process, answer your questions, and ensure a seamless experience. If there are any questions about any documents or anything throughout the process, you want to know that the lender you're working with can answer those questions. And me as a seasoned realtor, if it's something you have a question with, and I know sometimes you're not comfortable all the time talking to the lender because you've established a relationship with the realtor first a lot of times. It's okay to even, hey, call your realtor, ask them the question. And if it's something they can't answer, they can go back to the lender and get the clarification for you. But feel empowered as a buyer and a consumer to ask questions, okay? Please. Understand your closing costs. You want to familiarize yourself with closing costs. which include fees for appraisals. I just talked about that. Title searches. Why would you want a title search done? You want to make sure there's no liens on the home or any debts that may have been attached to their home. Because if you don't do the title search and that property transfers to you, guess what? All of the title issues will now also land upon you. So it's so important to have a title search done. There will be attorney fees or closing title fees, the companies, and more. So knowing these expenses upfront will help you to prevent any last minute financial stress. And this is why we also want to make sure that you have some funds set aside for this process. During this process, right? We get you approved, we got your budget, we find your house, we get you under contract. Now we don't want to begin spending outrageously, right? I have heard horror stories. Luckily, I have not experienced it in my career, but I have heard horror stories where people are gotten approved, got closed in a couple days before receiving the keys to their new home. They decide, I want to go get a brand new car to put in my new garage or my new home. So I'm going to get a new car today. Didn't talk to their realtor, didn't talk to the lender, and now you no longer qualify because that could shoot your debt to income ratio too high, and now you cannot qualify. Also, appliances or furniture. Some people say, oh, I'm getting my new house in a couple of days. I want to go and buy all my new furniture, have everything set up for delivery, and forget you're under contract. That could also throw your deal out the door and possibly cause you to lose your home. You do not want to make any large purchases. Do not overspend. This time frame is when you want to be the most disciplined. When in doubt, ask questions before you go and do it, because lenders aren't just looking at your original credit profile and your original approval from when you first applied. They are going to recheck your credit the closer it gets to the closing day, because they want to make sure that you didn't go out and do something that could now jeopardize your ability to pay this mortgage loan back that they're going to extend to you. So stay within your means and ensure long-term financial stability and a peace of mind. Review your loan documents carefully. If there is anything on there that is questionable, something you do not understand before signing those documents, you want to make sure you get clarification on any points of confusion and ensure you fully understand the commitment you're making. Again, remember, this is for most people one of the largest purchases you're going to make. So you want to make sure that you are absolutely clear on every piece of information and every term of that loan agreement. Ask your lender questions, ask your realtor questions. Do not feel like you're bugging them, because there is no question that is not a valid question when it comes to making such a large purchase. Seek professional guidance. I cannot stress this enough. When navigating the mortgage process, do not hesitate to seek guidance from a knowledgeable real estate professional. Our expertise can provide you invaluable insight and support you throughout the journey, okay? When navigating this mortgage process, it is so important that you are working with knowledgeable professional realtors, lenders, all the moving pieces, because there are several moving pieces for a real estate transaction. You want to make sure that they have the network, the capacity, the support that you need to move forward in your home buying journey. Now, I do provide free home buyer consultations. I also provide credit consultations as well, and life insurance consultations. I provide life insurance in the form of mortgage protection. So once I have a client that we are closed, we're then going to make sure we secure that asset. Again, should something happen, we know that your home is not going to be jeopardized. I want to thank you for taking time to listen to this. Please like, please comment, and share this with someone that could benefit from this. And I will see you all next time. Thank you and take care.